Welcome to the Alan Berry Reports TV show. I'm Alan Berry Laboucan. I'm the editor of the Alan Berry Reports and the host of this show. Thank you very much for joining us. Today I'm going to talk about gold. The last 5 or 6 shows have been about resource stocks that we follow. But today I'm going to talk about some of the things that I'm seeing in the gold market. And one of the big things that came to my mind, I watch a lot of CNBC and other business-related news channels. I read a lot of market commentary, and often when I read these, and watch these things, I get something always comes to my mind is that they just don't get it. And what I mean by that is back a couple months ago on this TV show, I'm just checking when it was, I did a show called Good as Gold. And in that show I talked about what I call reluctant gold bulls. And what I mean by that is back in the 1990s, I've been following the markets for 20 years now. And back in the 1990s, there was a lot of, on these same publications and shows that I watch, you know, practically there was virtually nobody who was bullish on gold or commodities for that matter. And in fact, some of these experts, if you will, almost dismissed it entirely as some kind of old relic of that was left over for the past. And the funny thing is that 10, 15 years later, now some of those same people that were sort of poo-pooing gold back in the 1990s, they've come around in the last few years. And part of the reason why they've come around in the last few years is because gold in the early part of the 2000s was trading around $250 an ounce, and now it's trading around $1,250 an ounce. And along the way, some of these people that weren't so positive on gold became more positive, if you will. But I still don't think they get it. What I see is that they kind of get the sense that, okay, gold is performing well. If you look at its performance and you sort of look at the charts, you can see that it's going higher. And so you either get on board or you get left behind. And some of these guys are starting to get on board. Now, one of the first reasons that they give for why gold is doing so well, and I hear this all the time, is they talk about inflation. That, oh, gold's moving up over $1,000 an ounce because of inflation, or the potential for inflation in the future. And you know, I just don't buy into that story. The reason I don't buy into that story is, well, there hasn't been much inflation for the last 10 years. If anything, it's been fairly moderate. And yet gold has gone, as I said, from almost $250 on the low to now we're trading over $1,200. So if inflation was the main reason, well, why was it going up so much? Another reason that gets thrown out there is that people are buying it because of economic turmoil, or things like currency volatility, or it's a store of value. And those reasons, just like inflation, there is a certain amount of people that buy because they see inflation. There's a certain amount of people because they're concerned about economic turmoil or big currency volatility, or they just want to park their money in some sort of safe spot. But if those were the reasons for the move in gold, and so that's an indication of the reasons that people buy gold, or is keys to the demand for gold. Well, if you had strong supply at the same time that you had all those reasons, gold wouldn't be doing very much. And so to me, the big story when it comes to gold, or other commodities for that matter, is that it's a supply story. And when it comes to the supply, why the supply is so weak, for much of the 80s and most of the 90s, there was a serious underinvestment in exploration to look for new gold deposits. And you need those new gold deposits to become producers and to sort of help the supply chain out. So if you don't put money in the ground, you're going to weaken up you're going to weaken the supply chain over and if you do that for an extended period of time, then you got an issue that can last for many years. And that's where we've been for a lot of years now. Sometimes also when I hear about people, they kind of forget that the key reasons that gold has moved so much has to do with the biggest consumer of gold, which is India. And now China is also becoming a major consumer of gold. So they're sopping up, and both those two most populous nations in the world, a lot of their people like to adorn themselves with gold jewelry. They like to hold on to gold in case of all those issues that I talked about, economic turmoil, currency volatility, or just a safe place to put their money that's portable. And that's the case for both India and China. Now, when you have sort of all the cylinders of the engine clicking, are hitting together, such as demand from India and China, then from the developed economies, you have concerns about inflation, economic turmoil, currency volatilities as a store of value. Then you've got all the demand reasons firing on all cylinders. And then if you've combined that with weakness in supply, you have a situation where the price of that commodity, in this case gold, is going to go up. We've been watching this for the last 10 years. These reasons for demand or the situation with supply hasn't changed in almost a decade now. And until I see either a severe slowdown in the reasons that people want to buy gold or a big influx of new production, I think that we got clear sailing ahead for the price of gold, and that's exactly what I see happening with the price of gold. Now, often when I talk about gold, I also say that, you know, I like gold stocks a lot, because in the case of gold stocks, what you're often buying there is you're buying gold in the ground. And many times, because the gold stocks are not nearly as well followed as gold, and even in the grand scheme of things, gold is not that well followed globally, you can find some real bargains where you can get gold in the ground, ounces in the ground, for really cheap prices. And that's why I try to look for these high quality gold stocks. Now, if you go back on some of our past shows on YouTube, we had 4 or 5 talks where we talked about resource stocks. Most of those were gold. And then we also had one we titled A Gold Mining Company in the Making. So if you want to find out about some of the gold stocks that we follow, they're on our past video shows or in our reports. We encourage you to do some homework on those companies. That's a close on today's commentary on gold. Before closing, I'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow the audience. If you'd like to help us, below the screen you'll see some share buttons that will help you pass directions on how to find the show on to your friends by Twitter, Facebook, or email. We really appreciate you taking the time to watch the show. We're well aware that everybody is busy these days, and we strive to produce a show that saves you time and gives you helpful, high-quality information. We hope you can join us for future shows or visit our website at allenberryreports.com. And again, all of our past shows are on our YouTube channel at youtube.com/allenberryreports. Have a great day.